Hey, Alex, thanks for joining me today. I'm excited to have you on some of this money moves and mortgages. And everybody loves buying a home. Everybody wants to look at homes. Zillow's the favorite site, but nobody really talks about the part that's really important behind the scenes. I guess if home buying was a car, you would be the engine, and nobody likes to pop the hood and really get into the gritty details. And I find it's one of the things that scares folks away from buying a property. So I appreciate you coming on. I'll introduce myself for those who don't know me. I'm Carlos with Cumber Real Estate. In essence, we help folks buy and sell their homes, and we solve real estate problems. And Alex is one of the folks who helps me solve a lot of problems, which is how to get you into the home up front. So Alex, I'd love to hear a little bit more about you, why you got into mortgages, and anything you want the audience to know about you.
Thank you for having me, Carlos. It's an honor to be here. I appreciate it. Why do I do what I do? I decided a while ago that I always wanted to help people, right? So it was just trying to figure out a way to do so. For me, it was basically making the decision on what was that route. Real estate was always something that intrigued me, that brought passion, that I saw the path to try and get people to make an impact, I guess is what I'm trying to say, to make a bigger impact in people and people's wealth, right? So I decided to become a loan officer for that reason. I can help people get them into their homes. For a while, I didn't realize the importance of a loan officer. And yes, to your point, a lot of people, they don't want to talk to us. It's not fun talking to us. It's what brings it real. We don't have the shiny object. We don't have the house. We have the reality, right? So there are definitely difficult conversations, but conversations that must be had, right? That we have to have them. And seeing from what I realized after starting those conversations with clients, bringing them through the process and having them realize and appreciate the work that it takes to get them into the house, that was very rewarding to me. So that's the reason I decided to do what I do. I love my job, and I love helping people, and I love the people that I do it with.
I like that story. And you're right. You don't have the shiny object, but let's be real. You might as well be holding the key to that new home in terms of what you do.
Right.
I find a lot of myths and a lot of fear around that. So that's why I wanted to pull back the curtain so folks could say. So today we'll be doing some things like busting myths, showing them how to save money, putting out some strategies to help you buy or sell in this market, even if you think you can't. Because let's be honest, and I'm sure you're seeing this, are a lot of folks a little scared or intimidated right now to kind of get into the game?
Yeah, I mean, we're seeing it, we've been seeing it for a few years now, right? After the pandemic, after the rates kind of went up from the lows that we've ever seen. Everybody since then has kind of been hesitant on, I guess, because of the affordability piece, right? A lot of people are just kind of wondering if they can really afford to make that mortgage payment. So yeah, there is always that hesitation. Is this the right time? The house is going to go up. Am I going to lose my investment? But in terms of buying a home, and what I tell clients all the time is like, as long as you're comfortable with the payment, that's the main thing, right? It's with your ability to buy, whether it's a house that you like. You don't want to buy a house that you don't like, right? You definitely want to buy a house that you like, but you also want to be really comfortable with that payment, and that's what we should focus on.
Yeah, so what I'm hearing from you is, yes, the rates may not be as low as we'd like, but that's for some good reasons within the market. But as long as you're comfortable and you're in a position to purchase, now is a good time. Would you agree?
That is correct, yes. I always tell my clients, if you're going to buy between now and the next 3 or 5 years, or 2 to 3 years as well, now is the best time.
Wonderful.
Yeah, you definitely want to be ready. When you're ready is the best time.
I love it. Well, perfect. So let's get off on a few myths here that are a little fun. And I'll give you first one, and I'll tee one up that real estate agents always say, right? And I want you to tell me, is this myth or truth, and kind of break it down for you. Real estate agents often say this phrase, marry the house, date the rate. Is this true or a myth?
So that came from around the pandemic time, right? When everybody was just like, the rates were so low that everybody was just like, you pretty much have free money, just buy a house. It's going to be a great investment. And it kind of made sense during that period, during that time. Now, we definitely don't want to, when you say you want to marry the house and date the rate, you're also saying just get into a payment even though you may not be comfortable with it, right? And that's the implication that you're suggesting, right? So now you can say that as long as again, we go back to that, let's be in a comfortable payment, right? As long as you're in a comfortable payment and in a house that you like, then yes, you can buy the house, marry the house, and date the rate if you're expecting it to go down. But don't do it for that reason, if that makes sense.
I love it. So you're saying you really got to buy what you want, be comfortable there. Don't just buy because houses exist and it's a buyer's market, but really make sure this is the product that you want or the house you want. Now, later on, do they have the ability to refinance? What do folks do? Because I know many folks are buying these homes in anticipation of the Fed. I think we've all tuned into our news channel or our social media feed and heard something about the Fed rate dropping. Do you feel like the rates are going to drop? Do you feel, and if so, when would be a good time to refinance if they do?
That's a tricky question. Will the rates go down? The predictions and all the expectations are that the rates are going to go down at some point. We just don't know when, right? The market's stabilizing a little bit. The inflation is getting under control. The labor market is doing its thing and just staying strong, so that's kind of putting pressure. So all those things will kind of keep the rates where they are. But we're also expecting some of the Fed to do some cuts this year. And what most people don't realize is that just because the Fed cuts the rate, it doesn't mean it's an automatic translation into the mortgage rates, right? So if they cut 25 basis points, it doesn't mean that mortgage rates will go down by 25 basis points. Anyway, that's a little bit besides the point, but yes, at some point we do expect the rates to go down. It's not going to be a significant change. We shouldn't really expect them to just drop. I think they're going to go down. They're just going to, go down at a slower pace than we would prefer, right? We all would want it to go down a little bit. People are going to be able to refinance when the rates go down. In most cases, you kind of want to be, it really depends on what your net benefit is, right? I've seen refinancing, people refinance on 25 basis points. I've seen, obviously, the more the better, right? About 1 point would be good as well. But usually after you purchase a home, 6 months or 6 payments is what you would need before you can refinance, which is usually about 7 months from the time you purchase your home.
I really like what you said there, because you said something that I don't think the average home buyer or seller is thinking about, that the Fed rate is not directly connected to the mortgage rates. And I think a lot of folks believe it is. They think when the Fed drops it, they look over and their mortgage rate drops. Because the Fed actually does short-term lending, and mortgage rates are based on long-term lending, which are a little more related to bonds. Is that correct?
That's correct. Yeah. So you're definitely. It's not an instant. I forget the word, I guess, but it's not the same. It's not going to be the same rate cut from the Fed that it's going to the mortgage rate.
Absolutely. The Fed influences the rate, but does not
influences it, but it doesn't determine it. Yeah.
100%. I appreciate that. Thanks for clearing that up a little bit there. Any other misconceptions about mortgage rates? I know folks are thinking that these rates are high, but are they historically high?
They're historically a little bit above average, I would say, right? It doesn't mean that they're historically high. Yes, we've seen rates at 18% and whenever it was, about 30 years ago. We've seen them at 11%, 12%. We obviously saw them in the pandemic around 3%. I would say the average is somewhere around the 6s. So the past few months, we've definitely been a little bit above average, if you want to say, right? But it's historically speaking, is not as significant as what most people, tend to believe that they are, right? It's something that it's changing, it's getting better, but it's hard for us to help people understand that basically we're comparing the rates to the 3%, right? We're not comparing it to the previous years or the 5 to the 6% that we had for many years. We're comparing it to the 3%, and that's what people are seeing as the biggest difference, right? But I would say they're probably about a little bit above average, but we're expecting them to go down in the next months, hopefully.
I like that. It sounds like your crystal.
Don't quote me on that. Yeah, I told many clients last year, I was like, yeah, rates are going to drop, we're going to be great. And it's like, yeah, we're still hanging in there. So we'll see where the market dictates.
I love it. And I think that's good. I think that you're clarifying that your crystal ball is as cloudy as everybody else because nobody really knows. Even the Fed doesn't know exactly what they're going to do.
You can ask. This is way above my pay grade. Most economists, they're like, oh yeah, the rate. I'm like, yeah, well, we're still here. We are.
Right. Well, perfect. Well, I think some folks, let's pivot a little bit and we talk about mortgage rates, but the other side is after you got a mortgage, things don't always go as planned. Earlier, you and I were talking a little bit about, we're in Maryland. Yeah, I know you cover other areas. What areas do you cover besides Maryland, just so our audience knows?
Several states, but mostly Maryland, D.C., Virginia, Pennsylvania, Delaware. I can do Florida as well, North Carolina. Yeah, those are kind of the main areas, I guess, I'll work with.
Excellent.
Mostly Maryland, D.C., Virginia.
Perfect. Yeah, the DMV area, as we say. I know I focus mostly on Maryland, but I have a lot of great partners I work directly with in those areas, DC and Maryland, and I'm a Virginia native as well, so definitely familiar. So right now, Maryland, I know, is facing some unprecedented pressure due to federal job cuts. We are actually the #1 employer for federal jobs. So I know I've talked to many homeowners and sellers who are experiencing a little bit of pain in their mortgages. Some are a little bit worried and stressed out. And then there's an ugly F word that they don't like that comes up called foreclosure. How far can someone be behind before the foreclosure process starts? Where's that red line for a mortgage company in general?
Usually, I think it depends sometimes, but it'd be 2-3 payments or 90, 120 days is usually where the threshold is. Before you start seeing, the foreclosure notice that is required for us to send out, to let you know that, we need to do something about this. So what's the plan? Kind of giving you a heads up. But usually, somebody at 90 days, 90 to 120 days.
You got it. So if they want to be on the safe side, don't let it get past 90 days. Would you agree with that?
Yeah. Well, you don't want to get it past the 30 days, but yes, the 90 days is the threshold probably, yeah.
One of my friends said it's kind of like stepping off a cliff. It's easy to walk forward past that point, but not a lot of going back easily after you cross that line. But not a laughing matter, but I know a lot of folks are facing pressure. Any tips that you have that would help folks in that, or resources or things you recommend if they're feeling a little bit of pressure from their mortgage? What could they do to kind of, put them in a better position? Because I know sometimes people freeze up and bury their head in the sand, which, as we know, is one of the worst things that they could do.
No, good question. I think, it's always just general advice for anybody, whether you have a home or you don't have a home, just have an emergency fund. Just kind of have that set up, 2-3 months of payments, just in case something happens, lose your job, something that gives you a little bit of breathing room. I would also suggest, obviously having communication with your lender. Make sure that review your options once your payment starts to get hard to make. See if I'm more comfortable, and the scenario that you are able to make a payment is just not as big of a payment. You can have that conversation and say, we refinance. Is that an option? We can figure something else out. I know there are housing counseling. Every state probably has a housing counseling agency that you can reach out to and just kind of connect and see what kind of advice they can give you in terms of budgeting and how to talk to your lender and what to do in terms of moving forward. You can also try and put that payments and forbearance and that sort of thing, although that's a little tricky because if you can't go back to making those payments, then the situation gets a little bit worse than necessarily better. So that would be the main thing, obviously, and then don't let it get to that point. Once you start making late payments and once they show in your credit, it is really going to hurt your ability to buy or purchase a property again. Most lenders, we don't allow any late payments in mortgages in order for us to extend credit on the new. I had a client that called me last week. He's like, I have one late payment. Should I sell? I'm like, yeah, just sell it, and then let's just go ahead and see if we can purchase the next one at a more but it turns out, I tried the credit check, he had 7 late payments. So that definitely put him out of the category now, right? So one payment if you're late, all right, let's go ahead and see if we can sell the home and get you more comfortable again. But don't let it get to be more than 2 or 3.
Absolutely. I think that's great advice. Yeah. And before it kind of gets there, the sooner you come up with a plan, the better you are and the more time you have to react. So it sounds like I heard communication was a great thing. Don't let it become a pattern of behavior. And, in your instance, you were telling the guy to sell so that they could put themselves in a better position and have more options going forward. And ironically, there was nothing you could do for them at that time because they kind of gone past that point and damaged their credit in the long run.
Yeah, absolutely. Yeah, and it saddens, right? If he had contacted us before, or had done something about it, and I understand sometimes, like you were saying, right? People lose their jobs, so there's no warning, right? There's no heads up, so then you kind of get caught. You want to try and prepare as best as you can, but if you can, then just start the communication, start the process as soon as you can.
Do something and do it soon is what I heard. And I also have a guide, and I'll put some information together. Anybody who reaches out, DMs me for that, I can send them a little guide for Maryland foreclosure resources that we pull together from the Department of Housing to Maryland Hope. There's a lot of tools out there. So don't think you're alone if you do run into challenges, and reach out to somebody for help, because it's the worst thing we can do in that situation is kind of nothing. So love that, man. Appreciate that, Alex.
You have that. I didn't know that. It's good.
We've got so many tools. I think the internet's a beautiful thing, but it can also be overwhelming. So we try to kind of give them a roadmap or some solutions that they can help with, that reach out to folks, because I'm an agent, I'm a home buyer, but I am not a foreclosure specialist, but there are a lot of folks who do work in that area we can connect them with. So good call outs. Now, we talked a little bit about homeowners getting in trouble. The other side is, Baltimore is also an investment community, right? And I know sometimes landlords get in trouble. You're expecting the tenant to pay the rent on time and then begin to do that. Do you have financing options that help buyers either pay for a rental property or help a landlord offload one? What options can you give those folks who may not have it as a primary home, but as an investment vehicle?
Investment properties, something that we have is DSCR loans. We can definitely do those. We can do a cash out. It can be a primary name, or they can have it under an LLC. Usually a good source of income for investors, right? To just kind of get some money out of the properties. It allows them to pay down some debt, or usually what they do is buy another property, right? Before they can start building their portfolio. So some options like that. We can also, if they can, we can also do just regular conventional loan, just try and get them approved, obviously for that sort of thing. The main thing with, just like for anybody that's buying a home for the first time, is to make sure that they're comfortable with that payment, right? So that payment does have to make sense in terms of making sure that the rent covers that payment, right? Otherwise, it can become a little tricky to try and get them approved, for them to qualify. But that's kind of the other out that we see that can help alleviate some of those investors from getting into trouble.
I like it. I heard the cash out refinance so they can liquidate, but you used a term in there, and I don't want anybody to get left behind in this conversation because we're trying to pull back the curtain. You gave this acronym out there, DSCR. Dig into that acronym, and then break down a DSCR. If, for example, the mortgage was $1,000, where would they need the rent to be? You could share with my audience those two things. I think that'd be helpful.
Well, you put me on the spot, Carlos, because I actually can't remember exactly what the DSCR stands for.
Let me jump in and bail you out, because I get asked this all the time by my clients. So it's debt service coverage ratio.
Thank you. Yes. I knew that. It was just like I couldn't get it off the top of my head. Debt service, yes. And I'm sorry, what was the question?
Basically, as I understand, that's a ratio between the rental ratio and what the mortgage is. And so depending on the ratio, 1.2, 1.3, 1.4, or so on and so forth, they need a different ratio in order for that property. Tell us about that ratio of rent to mortgage and how that DSCR works.
So basically, in order for them to qualify for this type of loan, you would qualify based on, we don't need any income from you, we don't need any pay stubs, we don't anything about your regular job if you have one. We just basically need to know that you can afford the down payment and the closing costs, and then we base your qualifying amount on the rent that you're going to get on that home, right? So let's say the rent that you're going to be receiving on that home is $2,000, and your mortgage would be $2,000. That would be a 1-to-1 ratio, right? So that's how we would determine that you can purchase a home with a mortgage amount of $2,000. That would decide what your buying power would be. Obviously, the more rent that you get, the easier it is for us to qualify you, and the more wiggle room that it gives you in terms of qualifying for that type of loan. And the same thing with a cash out refinance. So if you already have a loan, you kind of know what your rent is going to be, so we can use that to kind of gauge what your mortgage payment is going to be. And there's always a little bit of we can't, when we're talking about cash out refinance, there is limits, right? So let's say you own a home and it's worth I had a gentleman that he owns a home, it's $400,000. In his case, he can't take 100% out of the loan, right? So he would have to take 75%, so 325 or something like that would be what he would end up getting out of the mortgage. He would be able to take all of the money out. So there are some limitations, but that doesn't mean you can't, right? And if he wanted to qualify, and if let's say that rent ratio is lower, where your rent is lower than the actual payment, then we have to adjust the down payment that you're qualifying for, right? Or the amount to qualify you. So yeah, thank you for bringing that up. Sorry.
No, you're great. And I think you cleared up some of the nuances. Basically, I think you got to leave a little meat on the bone. So when you refinance, exactly, you can't pull all of the equity out. You can pull out up to 65, and that's a combination of what they owe on the property and what they're also pulling out in there. And then, I also heard that 75. There you go. 75% of it. So they got to leave 25% of equity in that property. In your case, 400,000, at least 100,000 in equity is going to remain. And that's kind of the bank's leverage to make sure that they don't lose their shirt as well.
Correct. So, yes.
Understand. No, that's very powerful, and I think that's great. And I think we started this conversation out talking about foreclosure and some of the challenges that landlords and homeowners run into. And, I personally have seen folks who thought they were lost and they were going to have to give the home away to the bank, quote unquote. And we've been able to, they're able to sell that home or get a purchase agreement in place. Many times they can stop that foreclosure or get the equity that they have out through a sale or a quicker transaction, whether it be on the market, which is slower, or an off-market transfer to a home buyer as well. So there are things you can do when your back's against the wall, and whether you reach out to a mortgage agent, a foreclosure specialist, or a buyer or real estate agent, get some options and make sure you do something rather than kind of taking the worst case scenario.
I think you're right. And then fortunately, I think for most people who are selling right now, there is some equity. They have, depending on what they bought, just about everybody will have some equity, right? So if you're short in finances, you want to obviously try to keep the home and earn more, right, or get more from it. But at this point, it's better just to sell, cut your losses and get what you can before it continues to deteriorate your financing even more. Finances, right?
Pretty stressful on the finances, so all of the above. So thanks for giving the audience some options there. Let's talk a little bit about this fun thing and called loan approval and some of the pitfalls that folks run into. And just to give folks context, I often hear people say that, I can't buy a home because my credit's terrible. And I know it takes some work to get it done there, but I'd also love it. When I started my home buy ownership journey, it was actually, I had a credit score of 580. So it took me a little bit while to kind of climb that ladder. And now my credit score is much stronger and I'm protected. But I was one of those people who said cash is king. So I didn't really have a strong credit history because I tried to pay for everything, which some people say your credit score is a trust score of lenders, and they can't trust you if nobody's ever lent to you. So
that is correct.
Let's get into the first thing that I always tell people. People run up to me, I want to buy a house. Can we go look at this one? And I'm oftentimes blowing the whistle or calling time out. What's one of the first things that people should do if they want to purchase a home before they call Carlos or another agent and go shopping? What should they do first?
So the first thing that they need to do is find out what they can qualify for, right? And in order for them to be able to do that, they need to check their credit, right? They basically want to talk to a lender. They want to kind of get out what it is that they need to do, what are the steps that they need to do to get them and to be able to find out what kind of house they actually qualify for, what kind of payment, what kind of loan program. and those sort of things. Most people kind of get, they get motivated, which is good, buy the house, right? But that is usually not the first step. The first step is to find out what it is exactly that you qualify for. When you call me, you call the lender. What we're going to do, one of the first things that we're going to do is check your credit. There are basically kind of four things that we use to determine how much you qualify for. So your credit, your income, obviously your debts, and how much money you have available for cash to close, right? So those are kind of the four things that will help us figure out what it is that you qualify for. So your credit, usually with a credit, when we check the credit, it's a soft pull. We usually start with a soft pull. It doesn't hurt your credit. It just kind of gives us a background of where you are and see if there is a possibility of working. With the soft pull, usually we can help you figure out if you need assistance with the credit, if you need to contact a credit agency, or if you're ready to go and we need to get started, right? That's usually the first step. And obviously just having a conversation, not just the credit, because you can talk to a lender, fix your credit, come back 6 months later, and then well, what happened with your job? You have your income, you have too much debt, all these other things. You didn't have enough for your down payment, or don't qualify for this or this program. Those conversations should happen kind of all at once, and that's kind of what I do. I want to have a thorough conversation with everybody, not just your credit is dead and you're done, right? We kind of want to tackle everything and create a mortgage action plan to just kind of get you there. So we do the soft pull, help you figure out where you are right now. If you're ready to go, we can go ahead and then do the hard pull, and then the soft pull does not affect your credit, right? And that's what most people think, is like, if there are two ways to check your credit. Soft pull will not affect it. We only get enough information to just kind of get us what we need to know, but it's not a hard pull. The hard pull in most scenarios does affect your credit, usually about temporarily 3 to 5 points, and that's something that's temporary, right? It's not something that's significant. As long as you're within, if your credit is over 700, let's say, and it goes down by 3 points, it's not something that we're really worried about. But if your credit is somewhere around the 600, and we're kind of want to keep it as high as we can, we definitely want to make sure we improve it as much as we can before we do that hard pull. But that's where we want to start. We want to know what your risk is, like you said, right? It's like, all right, that's how we know if we can lend money to you. We need that history, and that's what we're looking for.
You do something, and I've seen you do it for clients I've worked with you on. What do you give them that creates something that's more likely to get their offer accepted? Because many folks like putting an offer on it, and I'm like, hey, you don't have a pre-approval. So what do you give them that we attach to every offer?
So we do the loan commitment, right? So we can definitely, in terms of, once we have, let me backtrack a little bit. So once we have the credit hard pull, then I'll collect documents, then I'll send the pre-approval, right? So at that point, getting a pre-approval, you have your pre-approval, you're good to go. And back a little bit to your question is like, is my other getting a lot of pre-approval is going to hurt my credit? It's not so much the pre-approval, it's the hard pull, right? But if we do hard pulls within 30 days, then your credit is not going to hurt, right? As long as they're all the same type of mortgage pulls, right? So that's kind of what we want to do. But anyway, so now going to your question, it's a loan commitment. So once I have the pre-approval, I actually submit it. Once I have all your documents, I actually submit them to my processor, submit them to my underwriter, and they review the loan. So it's not just me giving you the pre-approval. They actually review the whole loan and start the process. I can give you a loan commitment, a financing commitment, which basically tells the seller, the agent, listing agent, this person is pretty much just does cash, because all they need is just that final, title, insurance, and appraisal to be able to close the loan. So yeah.
No, that's great. I think what I heard you say, you kind of give them a letter saying what their credit card can buy them, and then we use that pre-approval letter that you give in order to validate to a seller that they are in a position to purchase that and they can feel confident accepting that offer.
Exactly, yeah. That's what the pre-approval does. So the difference between pre-qualification and pre-approval is some people will say, hey, am I pre-qualified or pre-approval? So pre-qualification is basically you're just having a conversation, right? Like I could talk to people half an hour. Where's your credit? They tell me where it is. Everything is self-reported. It's like I make about this much, I do this, I have this much in the bank. And then based on that, I'll send an email, say, hey, this person pre-qualifies, right, for this. The pre-approval is much stronger because you do require the hard pull, first of all, and then we collect all the documents. So we verified the documentation, and now we know for sure that what the person reported is what it is. At that point, yes, we do the pre-approval, and you can, go out and go shopping with ease. Yeah, you know what your max amount is. You know what kind of price home you want to stay at. You know where your mortgage payment is going to be. You know exactly how much down payment you're going to need, or what kind of programs you're going to qualify. So that's the difference. You're not just kind of guessing and going to see homes that you don't really qualify for, right? Or the payment is going to be too much, or you can actually qualify for more.
I love it. You broke that down so well, because a lot of folks, when I see a pre-qualification come around, if I'm the listing agent, somebody gives me one with a pre-qualification, it's really just that seller's word. Where a pre-approval, you've validated what they're telling you, that it's correct, that the information is right, and then you're standing behind that information based on the data that you have from a true credit report.
Yeah, and then something that what I was referring to before that we do an additional, sometimes we do an additional, is that we go a step farther into that pre-approval. As a company, we actually, not a lot of companies do this, we actually submit it to the processor and the underwriter for reviews. So that pre-approval is not just a pre-approval, it's basically you have a loan commitment, having that loan commitment, that's like moving forward, we're ready to move forward, right?
I like that. So 3 levels to it: pre-qualification, pre-approval, and loan commitment, right? With your team, and that's something that you could set up as well for them. So love that. So let's talk about when keeping it real goes wrong. So sellers got in there, they're already pre-approved, they put an offer in the house, the offer has been accepted. Where do these deals go sideways? Can you give me a couple of examples of things, the top 3 mistakes that kill deals?
A lot of people just, we have these conversations with clients all the time, right? It's like you're pre-approved based on this much income, this much debt, and you're having this much amount of money. And then people are people, right? I mean, they think sometimes they forget, or they just didn't realize, or it happens. I had a client that had a car accident a couple of weeks before we got into contract. He went and bought a new car, never told me. So now having that new car payment is definitely going to affect his ability to purchase a home, because the debt to income ratio is now much less, right? In some cases, if you make enough income and you purchase a car, it may not affect it. So the important thing, right, would be to have that conversation, right? And that's what I tell my clients. Don't think you can't do it. Just, you think I'm going to tell you not to do it. Let's have the conversation, and I can give you the go ahead or not, right? The other thing would be clients who don't always have the down payment or to spend it. They kind of figure, it's like, oh, I had this much money, but I had to do this. It was an emergency, and I had to do this. So at that point, if they don't have the money, then there's really not much we can do unless we're able to, negotiate some more seller help or something like that. That would help them kind of get into the home. That would be another thing that we would do. And then what would be something else? So once we're under contract, so that I was talking about scenarios that happened before, after they received the pre-approval, and then before they got the contract. But even when you're under contract, people can do those kind of things. I had a client that he was supposed to be co-signing for his daughter. He decided to go buy a car. He didn't even think about it, because he wasn't buying a house, his daughter was, and he bought a truck. But then the debt to income ratio changed, obviously, because he bought a car, even though he was not, it didn't trigger for him, right? He was not part of the transaction. And then he ended up, just pulling out of the whole transaction. He didn't able to help the daughter. So those are kind of things that you kind of don't think about, but can happen during the transaction. And there's so many more.
Yeah, those are, I've been there. I always tease them, don't buy the new Maserati, right? So, don't buy a new car or open up new lines of credit, number one. Then keep your cash on hand. And then the other thing is, this always goes, but don't quit your day job, right?
That's amazing. Yeah, that's amazing. What the heck? Yeah, okay. Yeah, that you've been bringing that up. Yeah, that hasn't happened to me yet. That's why I didn't bring it up. But I had one that you bring it up. I did have a client that changed jobs. Again, like a couple of weeks before the into the contract. Fortunately, it didn't affect it that much, but yeah, that would basically kill the deal, right? If you change it. if you lose your job, it would kill the deal. Sometimes I've actually advised clients to take the new job. So I've actually, and that's kind of why I didn't really kind of think about it as again, because I had clients that were like, well, I'm approved and I got this offer, it is this much, and it's a salary, and I'm like, let's go. It's you're going to be able to get into a much better payment, comfortable. So, or they're saying, I'm going to get a raise. All right, well, I need a letter that you're going to get a raise, then you can qualify. So you can, changing jobs can happen, and all really this comes down to is, what I tell my clients, any questions that you think may affect it, just call me and let's figure out if it's something that is positive or a negative, right?
So trust your lender on that when it comes to job. If somebody's going to promote you and pay you twice what it is, it may be a good move for you, but consult an expert before you're making those moves, especially once you're under contract or you're in the process.
Yeah, because it's not always guaranteed, right? I mean, if they might go from, all right, so they're working at a restaurant and now they're getting a salary job at a different, in a retail store, that is something that's they haven't had that history for 2 years, we may have to answer more questions, right? So we may be able to accept it, but there's things that we have to look at. So long story short, call me. Ask me the questions. It may not be, but usually in most cases, you say changing job is not advisable, but just have the conversation.
I love it. That's a great conversation. I appreciate that. Let's get into a little bit of fun, and then we'll wrap this up with a little bit of rapid fire for some quick questions. But before we get into there, as an investor, I know sometimes we want creative options that allow them to win deals, right? Or to close the deal. So there's this weird thing that folks talk about that seems a little complex, a 2-to-1 buy down. How does that work, and who is that type of deal for?
It's very specific, I guess. It would be very specific to the client and its needs, right? So basically, 2-to-1 buy down is basically you buying the rate for 2 years, and then there are, like we have a lender buy down that we can do, 2-1 buy down, and then there's also the buy down that you can do with the seller credit. So if the seller is giving you a credit, you can use that towards your down payment, your closing costs, or you can use it towards your buying the rate down. And basically what it means is, let's say you qualify right now for a rate of 7%. 2-1 buy down basically means that for the first year you would have a rate that's 2 points lower, so it would be 5%. And then the year after you will go up to 6%. And then after the 2 years you will go back to your 7% interest rate. What that would do for you now is it would allow you to have a much more comfortable payment. And in the event that 6 months from now, a year from now, or whenever it happens that the rates go down, you can actually refinance into that lower payment. So it's a good strategy for to try and qualify. You do have to qualify you on that 7% rate. We can't qualify you on that 5%. So something that we can talk about. But as far as strategically, sometimes it depends on what the client wants or needs. They might choose to use it either for closing costs or down payment, rather than for to buy the rate down.
No, that's good. Sounds like a kind of easing yourself into whatever the full purchase amount of that home is. Give you a little time to get your legs under you and kind of maybe rebuild some of those reserves that you may have depleted when purchasing that home.
That is correct. Yeah, it is a good tool that we use for when we can. And it's funny because not everybody sees it that way, right? Like this is a good option for you, and they're like, well, yeah. So you try to present the options, kind of educate them about what the pros and cons are, and then people have the ability to choose, right? So that's what's important, right? Because I want to educate my clients, I want to be able to make sure that they understand, but ultimately I want them to make the decision that is best for them.
100%. Yeah, no, I've definitely done that. I know I've had sellers who give concessions, which help the other folks either do a buy down, or they give concessions, which helps them use that seller concession towards the down payment as part of that. So I think there's a lot of creative ways to close, and I think that's why it helps to have a good, loan officer like yourself on their side, so that they can learn all those little nuances. And I know that's just the tip of the iceberg there.
Yeah. Thank you. Yeah, we do try. I mean, that's all. Again, we educate them, and whatever works best for them. Every scenario is different, right?
And I think the other thing that always breaks my heart is when people think that the home ownership is out of their reach. But I know Maryland has a lot of great programs, and you've had some great programs in different areas that I've worked in that allow folks to, kind of get a catapult into home ownership. Can you give one or two little hidden programs that most buyers don't know about that could benefit them or help them to make home ownership a reality?
Yeah, I mean, fortunately, Maryland does have a lot of down payment assistance programs. Most people know about the Maryland Mortgage Program, which we use quite a bit. It's for first-time home buyers. A lot of people don't realize that if you haven't owned a home for 3 years, then you're considered a first-time home buyer. So people don't realize, people tend to think it's like, oh, I already owned a home like 10 years ago, so I don't qualify for it. That is not true. Yes, if you haven't owned a home for 3 years, you are a first-time home buyer in our eyes. So you would qualify for the Maryland mortgage programs. And then one of the questions I always ask my clients is, obviously we want to know where they want to buy, right? We want to know which areas, because every county in Maryland, not every county, but a lot of counties do have their own down payment assistance programs that they do come up with. So again, sitting down, having a conversation, trying to strategize, where are you buying? This is the option. If you buy with the Maryland Mortgage Program, this you buy with PG County, with Anne Arundel, with all these different options. We present those options, and then they can buy. A lot of people in Baltimore, what they don't know is if you're not a first-time home buyer, there's a lot of targeted areas. So even though you're not a first-time home buyer, you can still use the program in those targeted areas to qualify.
Absolutely. One thing I love about that, I think the Governor Wes Moore talked about he's putting a lot of emphasis on creating home ownership, so he can create just not a community of renters, but a community of owners as well. And I'm glad you pointed those out. And we'll make sure we get your contact information at the end, so folks can really, if they missed it up front, can really know where to reach out if they've got that question. So let's close this out, have a little bit of fun here, and I'm going to throw you a few rapid fire questions, and you just kind of give me your best off the cuff answer here. So, okay. First one, outdated mortgage rule to forget.
Outdated mortgage rule to forget. Well, I don't know about rapid question. It's a rapid answer. One mortgage, you don't have to, people think that you have to put 20% down. You'd have to put 3% down, right? So most people think it's like, oh, I want an FHA loan because they have 3.5. Well, if you do conventional, you can actually do 3, which is less than 3.5.
Purchase many homes. I have never put down 20% in my life. So
yeah,
yes.
That's not the, If you ask any good investor, they've never done that.
So I love that. 20% is not a thing. Fastest deal you've ever closed, and what made it possible?
10 days, and it was, we did the loan commitment, so it was already pre-approved. It was already, the processor looked at it, the underwriter looked at it. Basically, we're waiting for the appraisal. And we actually would have been able to close sooner than that, except that, at the last minute, it was actually 9 days, and then we missed something. But anyway, 10 days. 10 days.
10 days or less, under ideal circumstances. Love that one. All right. What one thing every seller should know about mortgages?
Every seller should know about mortgages. One thing every seller should know about mortgages. There are a lot of options out there. The only thing I guess one of the main things that comes to mind right now is we do have a bridge loan that is an option for a lot of sellers who are trying to purchase a home, but they don't have the down payment for the next home. We do have that program where we can use the equity of the current home to use it as a down payment for the next home, and then they can buy without having to move twice.
That is awesome, and I think that's pretty amazing because folks are always trying to put in contingent offers, and many sellers do not like those. So you can get that bridge loan, and I think that's a great tip. All right, so 10-second advice for buyers. What would you tell them? Everybody's waiting on the sidelines, and they're sitting there in their starting blocks and waiting for the magic rate about to happen. What would be your best advice for a buyer in this particular market in this day and time?
If you're ready to buy, the time is now. As long as you're comfortable with that payment, just going back to the beginning, right? Just be as long as you're comfortable with it. Don't try to time the market. It usually doesn't end up well. As long as you're comfortable, you're ready now. You're ready to pull the trigger, find the right home. That's the best thing, right? Don't focus on the rate. Don't focus on whether price is going to go up and down. If you're going to purchase in the next 2 to 3 years, and you're planning on staying in the home, 5, 7, 8 years at least, then you shouldn't be any worried about that.
I appreciate that. Alex, you've given a lot of great info today, cleared a lot of the fog, and hopefully given a lot of the folks listening on in more confidence and competence to allow them to either start their home ownership journey, to sell their home in the most efficient manner, or to get that next dream home, even when the rates are what they are, right? So give me a little reminder who you work with, how folks can find you, and the best ways to reach out.
Yeah, so I work with Fitzgerald Financial. I'm out of the Columbia branch. My cell phone is 301-938-8749. I'm not going to give you my email because it's too long, but hopefully you can put a link where you can click with the application. You can reach me that way. But yeah, call me, text me, and then we can get started.
I love it. Alex, thanks. I know my takeaways. I always enjoy these conversations with you because I feel a little bit smarter. And I would encourage anyone who wants to know more to, DM us, learn. I can send you, if you're facing challenges with your current mortgage, whether you're thinking about what does it take to buy a new home. If you text us, learn, or DM me, we'll be able to give you that information and help you. And the best advice I heard from Alex is, if you're ready, now's the right time. So I appreciate everybody from listening on in, and I thank most of all Alex for educating both our audience as well as myself, and we look forward to connecting with you more. If you have more questions or want to hear more, let us know what other information we can get from our professionals to help you out. Thanks again, everyone, and we'll talk with you soon.
Thank you, Carlos. Thank you for having me.
Hey, no trouble at all, man. Much appreciated. So was that as bad as you thought it would be? Was that horrible?
It was good. I just wish I was more eloquent like you are. Sometimes I trip on my words and it frustrates me, but it was good. No, I liked it. I mean, it was just like that. I know it's something that I'm constantly working on.
Bruh, it takes a lot of reps, but here's the deal. You're the guy who makes things done. So I think that's really the advantage for you. And I think that your knowledge definitely came across in there, and I appreciate that. And you, like myself, you generally care for your people and you try to help out. And I know you're a father and you know how home ownership changes lives in a better way. So I appreciate you being a great partner.
I appreciate you, man. Thank you for having me the opportunity. And, I just, I really enjoy, talking to you, and good for you for doing this. So where are you posting all of this? I know I've seen clips obviously on social media, but is there somewhere, do you have a podcast or anything?
So I know like everybody else, I got a YouTube account, so I'll be posting the long form video on YouTube. I will have short term on YouTube Shorts, but I'll get little micro clips for you. So if I pull out some little micro clips and get them together, those are the things I can kind of use to tee up, because sometimes folks, you get a little teaser like, hey, tell me about this. That's why I was asking you those questions. We'll cut and edit and kind of add some captions to it and then throw it back out to you.
That's awesome. Yeah, send it to me. I appreciate it, man. I'm really grateful for it.
No trouble. Should have that by the end of the week, as long as I don't overwhelm my awesome VA Laura, as I'm always like, ooh, one more thing, right? So we'll send that out to you so you have some things as well to just kind of share with your audience on there as well. Absolutely. And I can even give you the raw footage as well as the editing. And if you ever need great editors, I work with Todd Collins. He's got some great video editors who kind of put some of that work together as well.
Okay. Yeah. Awesome. Yeah. Definitely love the connection.
Yeah. I appreciate you. Enjoy the day. Hope the week's got off to a great start. And you and I will catch up here soon.
Yeah. All right.
Talk to you, Alex. Thanks again. All right now. Bye-bye.
Bye.